Hello and welcome everybody to this evening's day trading, and let's have a look at the charts. We have CPI target for me is this daily fair value gap, and yeah, 22.05. All right, hope you can hear me. Let's see. We can have this set as okay. Let's see where we are at the charts. Okay, we work in this weekly fair value gap. We have bounce from the 75% level. Let's see. Okay, so we have the opening price here. Okay, this is the daily open, 9:30 open. And we're not trading until 9:50 to 11. Okay, and here we have ES as a confluence, and we're looking for divergence here. My bias long term is, as you know, bullish, and I think we're going to use these levels, the quadrants on this red fair value gap, which is the weekly fair value gap. Right now we have the kill zones. Okay, yeah. I think this is suspect because they are equal highs. I think we will gravitate to these. We have a big SIBI, sell side inefficiency here. We have Asia high here. This is how I used to mark out. Like this. You see how perfect reaction we have of this 75% quadrant of the weekly fair value gap, upper quadrant level. The body's perfectly stopped there. The wick make the damage, but the body tell the story. let's see how the opening range gap is. Not that big. I'll measure it. So now I plotted the NVOGs. The black one is new day opening gap, the gap between the close of the day and the open. And the red ones, if we can see some of them. No? Yes. Here is this week's NVOG. Sunday close and Monday's open. And this is also levels that the algorithm will use, as you see. In confluence with the 75% reaction, we also dipped into this NVOG, where we got a new reaction, and then dipped down to an NVOG from Monday. Boom, and reacted and goes for this high. And I think we will push a bit higher. We have the high of the fair value gap also. So now when we push higher at the opening, it could indicate that this is the Judas and we will go lower today. I don't know. It's CPI tomorrow, and we have to be aware of that because CPI is the high impact news that the algo is waiting for. So probably the Tuesday, Wednesday will be the Monday, Tuesday will be quite flat, and the real move comes at CPI. And I actually like trading CPI because after CPI we get the weekly bias cleared for us, and we can go from there and take a lot of high probability trades very often. I hope you all hear me good. I have a new mic installed. Yesterday I took a nice win with you all, and I outlined it in real time. I also I didn't take this on my real account, I took it on my FTMO verification account, but I broke my rule. I actually moved my stop to break even, which means I got stopped break even though the trade was a winner, so not good. So we met our target here. Boom. Little remark that we made good. Now we're at the high end of the weekly fair value gap. Let's see how we react here. Yeah. Let's see where we have the first percent fair value gap this morning. It's something that we used to. Let's see, it's here actually. Let's make this like this and this. Today's it's Tuesday, first presented fair value gap. It can be used as a trade entry or a trade target. Let's say if we're bearish here, we could expect the price to revisit this. Right now I am neutral. I have no bias. I don't think I will take a trade today because we have, as I said, CPI tomorrow, and I like to wait for that. But we can read price nevertheless. I might have to go silent in a few minutes because my family is coming home and I don't yet have office. So there will be a lot of children screaming and jumping around. I have my other screens. I have 3 screens. So, and one of them is divided into 4 charts, and this one is divided to 2 charts for divergence between indices. The other one is divided into 4 charts on NQ with different time frames: 1 hour, 15 minutes, 5 minutes, and 1 minute right now. But that can change. Now we're moving to first presented fair value gap. Let's see how we react here. To have different time frames up makes me be able to more read the market, I think, sometimes. Okay, we're making a bearish 5 minutes order block. Now we're down at the Tuesday first presented fair value gap. We have pre-market low here. Pre-market low in the same area as the Embark midpoint, the Embark CE. So this could be a draw on liquidity the next, but we'll see. Okay, we bounced. Didn't confirm the 5 minute order block for bearishness, so we just wick through it. But yeah, still neutral. 5 minutes to where my trade, my silver bullet setup is allowed to be taken, and the silver bullet is the one that I trade, and I use it between 9:50 and 11, and I prefer to do it in the first 20 minutes of the first 20 minutes between 9:50 and 10:10. I made a range, open range here for 68.5 handles. No divergence as I can see. And as I said at my pre-market analysis yesterday, I think this red area, which is the weekly fair value gap, here, these levels will be used, the midpoint, the 75%. Here we are at a 15 minutes time frame. This is the first percent fair value gap of the week. This is very good to take out in time and keep it there the whole week, because it could probably will be used multiple times. started to move quite nowhere, jumping between the first presented fair value gap and the weekly fair value gap high. So nothing yet. What's this gap? Got some glitch in the matrix here. A huge gap here on the 1 minute. Doesn't show on any other chart. Weird. Do you have the same? Do you have the same? I think we're pushing higher. I think we're going higher. Let's check out the 15 seconds chart. The 15 second chart is actually quite good because you can use that for education, for your ability to read the market, because everything is fractal. So the 15 second is as good as the daily chart, but it goes a lot faster, so you have more time to see more setups, more drawn liquidity, and you can apply that on the daily chart and make your bias more spot on. And as you can see on my Instagram and X, you can see my analysis is really good actually, and that's because I have studied a lot, but also a lot of screen time, a lot of chart time, and a lot of lower time frame, a lot of time in front of lower time frame. Yeah, and we made a higher high both on ES and NQ. This is like trend line liquidity that I think we will take out. Okay, we took out the trendline liquidity right now. Maybe we will go a bit further. Let's see. 30-second looks more clean, right? Higher high on ES2. If I look at the 5-minute chart, it looks like no good at all. This is no good trading environment, and we have 5 minutes for silver bullet time, which is 10 to 11. I have no direction, no bias, and therefore there is no trade. How about that? I hope my microphone is working. If not, give me a heads up in the comments, please. You can do that anyway. Give me a 1 to 10 how good you can hear me. Okay, let's see how big the opening range is. It's from 9:30 to 10. Okay, so this is the opening range I have marked out, and we have 75.25 handles for that one, and we can make quadrants on that, which can be used as also trade entries. We'll see how we reacted at 75% here. But this market is not tradable, at least not for me, because there is no direction here. We are bullish for CPI, but right now I think we're just going to mark time and make liquidity runs. So I will mute now and just look with you and write on the chart. we actually have nothing, and that's what I expected for this session. We are moving in a range and we are barcoding, so nothing. ES is pushing higher. We might reach the consequent encouragement of this week. Here. And it's much stronger than NQ right now. Let's see how we react at this point. Oh, we pushed through. Let's see if we wick it or if we go for the high of this candle. So if we make a fair value gap of this could actually be an entry point for more upside. This is not financial advice, so don't copy anything I do. I will not take this trade, but if there wasn't a CPI tomorrow, I probably would, but the odds are not with me. But this is what I want to see. I want to see ES dip into this fair value gap and go for the highs and up here. see if we get this fictive entry or not. We want this fair value gap. Now we have equal highs also, so you could have been using this wick as an entry, but this is more in discount. And here we have the entry. You can see it here, the fictive entry, because I didn't use it in real time. Here, perfect. And we have a 2.2 R as a target. And probably this won't work because it's the day before CPI, so I have no, what do you say, I don't think this will work out, but if it wasn't CPI I would take this trade. Let's see what we have for upside target. We have on ES, we are here, we have this high, this equal highs. This is very nice, yes. Okay. And here are the regular trading hours highs. So this is regular trading hours highs. Okay. So we're going for the RTH high, but and here I would want to push the stop loss up to break even, but I have a set and forget approach, so that's wouldn't be happening. So we are up 1.5 R now. Let's see if we can use this new imbalance for more upside and take out the RTH high target 1 and push a bit higher. And we can see we use the midpoint of the fair value gap, CE. Deep retrace into this wick CE. You can see how exactly we moved into it. That's like magic. So if there is no algorithm, why would buyers stop dead end right here? Another dip into this fair value gap, and now we stop dead end on the upside of it. Also algorithmic signature. So we respect the bullish PD race. as you can see, we wick down to it, and probably we can use it as a springboard for the upside. But this is the weakest PDA array that ICT have. It can be used and go through and back and forth, but in confluence with others, this is something you can use for, especially when you have when you try to enter a fair value gap and you find volume imbalance like this inside of here. You can use that level for more precise entries. On ES, we can see we just wicked about the weekly fair value gap, and as I said, I think we are moving inside of this until CPI, and let's see if ES can push higher even though ENQ is stuck in its fair value gap range. Yeah, we have reached the RTH high right now on the spot, and our target is a little bit away here. I want it to go here. Here is just, let's see how many Rs, 1.8 Rs were moved. And you can feel the itch to move the stop loss up to break even. But this fictive trade, I won't do it. So I hope we can push a bit higher before the 1050 macro. It's about here. Because at the macro we start our next move, and you never know if we have a reversal. I think though we would be able to take out the RTH high, because there is no reason to just leave it like this. I think we will peak up. I hope we will take out our target at the same time. Starting to build some trend line liquidity here though. So we might see a retrace, but now we have, yeah, we'll see. The NQ is still moving sideways, barcoding. Nothing to see, nothing to see. Equal lows, equal highs, yeah. But here we go with the ES pushing up and out of the RTH. And there we are in target time. So this was a successful fictive trade that we didn't take live because of the CPI tomorrow and the risk of taking trade too early. So there we go. Let's capture this on some film. Boom! Took it live. Really nice push up here. So the trendline liquidity might be taken out during the 1050 macro and the lunch our reversal play, and then we can look for the 10 a.m. low, because that is something the algo likes to hunt. 10 a.m. low. Keep that in mind, and I want to end this live stream now when we went to our target, and I hope you had a good time and that you traded well. I hope to see you tomorrow, yes?